Hello, this is the Chart Profit video. We're about 2.5 hours into the session on Friday 19th of January. Looking here at the pulse chart for the S&P through Thursday. It's all pretty much more of the same this week. The breadth remains supportive, green. The price oscillator at the bottom here, the momentum and the trend remains strongly up. And if we look at the top here on the spider price bars, you can see the green bars representing aggressive buying and the red bars representing aggressive selling. And in this latest leg higher, you can see that sellers remain absent, buyers very active and effective, market higher. We've seen evidence of intraday selling on the profile here on Tuesday and Thursday this week. You can see the price and the tick numbers all negative, but the value areas certainly not lower. So evidence of intraday selling, but the market holding up. That's ineffective intraday selling, as I said here. And you can see that when the buyers are active, this aggressive buying here, green at the top, value areas are higher. So this is still buyers in control. So although there is plenty of evidence that the market is getting overheated, we're looking at the sentiment numbers, which we'll do in a second, seeing no breakdown in price on any time frame yet. In late December, my version of the Ridex assets ratio peaked here just above 22, and we're certainly heading back that way. So extremely high reading when we look at the relationship between Ridex bull assets and bear assets. And again, if we break above this level here, we'll be into new high territory for this ratio. Certainly a clear indication that the retail trader is extremely bullish. There has been more evidence here in the public poll from AAII. Certainly a couple of weeks ago, 2 weeks ago, the bulls percentage reached 59.8%. That was a 7-year high. Bears percent was higher this week at 21.4%, but that fell to 15.6 2 weeks ago, which was a 3-year low. And the net figure, bulls minus bears, currently at 32.7, but that reached 44.2. That was 2 weeks ago again, that was the highest since April 2004, and that's this spike here. So again, evidence of extreme bullish public sentiment. And newsletter writers, if we look at the investors' intelligence indicator, more extreme reading than the public poll, the bulls percent, as I said here, reached an even higher extreme at 66.7%, which I believe is a 30-year or 30-plus year high. For the bulls percentage, and the bears percentage was lower at 12.7%, and that's the lowest I have in the database. And again, I said here, probably the lowest since the 80s. So newsletter writers, to say extremely bullish is probably an understatement. Some commentators calling this nosebleed territory. I wouldn't dare do that. We were looking at data from Lipper US fund flows a couple of weeks ago. I actually made the point 4 weeks ago that this indicator is at odds. This was 4 weeks ago with other recent sentiment readings, and by that I meant this number down here, which is the 4-week flow number 4 weeks ago. It was a negative 33 billion, and unlike other indicators which were peaking at that point, that one was showing an extreme negative reading, the lowest since February 2008. And I also pointed out at the time that was more commonly seen at market lows rather than highs, but that's kind of corrected itself, and we are now seeing this indicator, or the 4-week flow number, thanks to an inflow number of 9.1 billion into equity funds and ETFs this week, and that lifts the current 4-week flow number up to 36.8 billion. That's a high number now. So as I mentioned earlier, it's pretty much more of the same this week, with the spider holding near its highs, and the first support quite a way lower, the 4-month at 267.18. Hopefully we'll see a useful controlling price level migrate higher to give us a higher support that we can monitor, but currently things go wrong below that level in the long term. UK's FTSE 100 index closing the week a little lower than the previous week, normal corrective behaviour, but holding the breakout above the previous high. German Dax Index has been lagging over the last couple of months, closing near the high of the week this week. November high just a little higher. Saying over the last couple of weeks I'd prefer to see TLT, the T-bond ETF, above 126.66, which is the 15-month controlling price. We're kind of in no man's land here. We're above the major at 119, but you see dotted in the halfway point here from the low early last year to this high, and we've seen 3 attempts at that level heading back there at the end of this week. Price convincingly below that level would suggest a retest of 119. As we know, the major controlling price for the oil fund ETF migrated higher at this point to 1141, and we've held that and come swiftly higher. I said at the time that migration of a major controlling price often precedes a directional move, and that's certainly been higher. And here's the gold ETF, GLD, the major at 120.9. We know that the controlling price migrated back down to about 119, and then here migrated back up, and that's usually quite bullish. We held that controlling price and rallied quite strongly. It's just a pattern I've seen a few times. You see a major migrate higher and then lower and then back to the previous level, and then you see higher prices. And assuming that the major remains at 120.9, it would take some time at higher levels to lift that. So assuming that it stays down here in the longer term, in the long time frame, as long as price holds that level, gold is in a strong price location. So that leads us to the dollar. Quickly review what's happened here. The major at 95.50. There's a little support here, and then when we broke that, it came swiftly lower. And across this period, we built an 8-month at 93.46. Rally back. I said that unless the dollar index was printing above 95.50, it remained in a weak price location, and we couldn't assume that any kind of bottom was in here, which a lot of people were calling for. And we've seen the price obviously turn over from there, and then we've seen a new low breaking below the September low. So the dollar remains in this downtrend until we find solid evidence that there's been a change of trend, which I don't see at the moment. And we see the Euro FX chart, this breakout held this week, and the pound dollar chart remains in its uptrend and has recovered a lot of ground since Brexit. Back over here, chart fell all the way through to October, and then there's been this slow rally back, and we're currently back within the range of the Brexit week itself. And finally, the dollar yen, key chart, as I've been mentioning. We've seen these attempts over the last few months at 113.70, which was the major, and then 2 clear resistance points here. We found support at this point at the 2-year controlling price at 111.30, and that's actually been broken, and we've just seen a little rally back into it, and now we're currently printing below that level. So this week has been spent printing time below this 2-year, and short term that's weak price location, weak chart. Longer term you want to see price back above 113.70, which is the major, unless that level migrates. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.